Let's give you the markets update now. The JSE facing mixed trade this morning after the US market ended lower overnight. The UK Prime Minister resigned and media reports that China is discussing shortening the quarantine period for visitors to the country. Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, joining us now to give us a wrap of the latest market moves. Mr. Thulare, thank you very much for your time. Let's start with the Rand losing ground against the rampant dollar. Give us your update on the end. What should be what we should be looking out for when it comes to the performance of the currency going into this weekend?
Good morning, Claudia. I suppose you're very much right. It's been a crazy week and so far what we can really call a really volatile market. I mean, if you just look across, in the US, we've seen a hawkish Fed. We've seen the chaos in the UK politics. We've seen higher inflation data out of the UK and also the Eurozone. That's weighing on risk sentiment. You've touched on China as well. So at this point in time, the dollar remains king, even after UK Prime Minister Liz Truss resigning yesterday afternoon. Overnight, we had Fed officials coming out to say that interest rates are likely to rise above 4% this year. So I think they're really preempting us to further interest rate hikes from the Fed over the next 2 months before we close off the year. The British pound is under pressure, especially after the Prime Minister resigned just 44 days into the start of her position. Across the board, investors are now looking for safe haven as financial markets really remain in turmoil and volatile sessions. At this point in time, it looks like the dollar will remain stronger for longer. Locally, we do know that there's still issues in terms of Eskom, Transnet, the potential grey listing, and also we know that, there's a few key event risks locally over the next 9 weeks. There's the medium-term budget statement next week from Minister Godongwane. There's also the Reserve Bank in their last meeting of the year next month. There's also the much-anticipated ANC's elective conference in the close of the year. So on the back of that, the Rand really remains under pressure. At this point in time, we are seeing ourselves getting around this 1834 level. Remember something, all-time high for the Rand is 1935. So from where we are at this point in time, we're actually 1 Rand away from all-time highs that we saw in the middle of 2020. Now, if anything, at this point in time, if there's talks about a recession, higher interest rates from the US and obviously higher inflation from the rest of the globe and potentially talks about more volatile markets and a stronger dollar, I would not discount us getting to that 19 mark against the dollar very soon. And also remember, at this point in time, when we just look at the year-to-date basis in terms of the performance for the Rand, we are the 13th worst performer in the emerging market basket, having lost about 12.5% against the dollar just this year. So it just shows you how volatile markets have been, and obviously that's been compounded into also the commodity sectors as well.
You touch on the commodities sector. The price of Brent crude, it's up. Gold, on the other hand, is also up, while rail is rather retreated. Let me correct myself there. Gold retreating, okay? The price of platinum, though, trading lower as well. What is happening there?
So across the board, if you just look at gold, that's held a 3-week low. Obviously, speculation is very rife that the Federal Reserve out in the US will keep aggressively tightening interest rates there. And obviously, there's potentially a trigger, a recession that's really had investors obviously seeking shelter in the dollar. I think the renewed strength that you've seen in the dollar has now had gold on the back foot, and gold has tumbled more than 20% since the peak that we saw close to the $2,000 mark in March already. So you need to remember, gold is a non-yielding metal and obviously has a negative correlation with the dollar. So if the dollar gets stronger, gold will be weaker. And obviously has been pressured by the stronger US dollar. Already even the comments from the Fed officials, that's continuing to rattle precious metals, and obviously bankers are keeping up the rhetoric that we need to have higher interest rates to curb inflation. Now, when you just look at the oil side of things, I think at this point in time, oil is also having a very volatile session. on the back of concerns about a global economic slowdown. Obviously, that's going to continue to hang over the market. Investors are really trying to juggle the slowdown against the fears of, the oil market tightness. I mean, you've seen OPEC cutting supply over the past couple of weeks, and obviously now we are really being whipsawed around where prices will be over the next few weeks and obviously a few months. If you look at also the likes of China, they're also one of the biggest importers of oil. They're also having their own issues. That's also feeding through into the price of oil. If you look at oil as well, I mean, that's lost a third of its value since June due to the slowdown concerns and obviously the aggressive monetary increases from the central banks globally to tame inflation. However, I think the market is facing a period of supply uncertainty in the coming months, especially after OPEC has cut output, and obviously the European Union is also implementing sanctions against Russian oil. So it is going to be also an interesting dynamic, especially given this geopolitical tension out in Eastern Europe over the next few weeks in terms to see where the oil prices and also precious metal prices go.
Let's quickly talk company news. Tencent's share price trading at its lowest in 5 years. Help us make sense of the market moves there.
As we touched on it earlier, Koli, I mean, obviously investor sentiment has turned negative following concerns about China's macroeconomic outlook. I mean, the drop comes as Chinese stocks have declined across the board this whole week. I think that's really concerned by the earnings outlook, especially after China has delayed the release of key economic data, and also they've reiterated their commitment to a COVID zero policy at the Congress meeting last week. Already, when you just look at the Nasdaq Golden China Index, which is a basket of Chinese stocks that tracks all these Chinese stocks, that has fell about 7%, which is the lowest reading since 2013. If you think about it also, given the fact that Tencent was one of China's most valuable companies by a comfortable margin, their fortunes have also slumped this year as the world's second largest economy has struggled and, to gather momentum in terms of what we're happening globally. I think everything, when you just look at the IMF, the World Bank, everybody is just releasing forecasts when they're now downgrading their macroeconomic forecasts in terms of growth. So I think even Tencent obviously is getting hurt by the back of on all of these. Also, if you just think about the lowering costs and also them disbanding non-core assets, it is going to be quite an interesting, tale for Tencent, especially given the fact that over the past 10 years they've done extremely well, but at this point in time they are really facing a whirlwind. And obviously, I think when you see the likes of the COVID zero policy, you do see the types of intervention that China is trying to provide. It is something that obviously it is top of mind for them to see how they're going to prosper in the next coming years.
Let's conclude the conversation with Rubix, which has published its trading statement for the 6 months, which ended on the 31st of August 2022. Talk us through their performance.
So it's quite an interesting set of results. I mean, they've released their earnings saying that they expect their earnings per share to be between 10 and 20% higher than the previous corresponding period. And obviously that has been boosted by the high government spend in the South African market on the back of the infrastructure rollout. And also the Australian unit has also performed really well. But if you just remember, these financial statements that have been released, they have not been reviewed nor reported by the company's auditors, but already the group has maintained a strong balance sheet and also a healthy cash balance throughout this whole period. They are saying that combined with their diversified operations, they are in a position obviously to participate in the increased construction activity in the South African market. If you think about it, they're also expected to finalize the Bait Bridge project out in Zimbabwe. This bodes well for their rest of Africa divisions, where they have operations in the likes of Botswana, Mozambique, and obviously Namibia. Now, if you think about also what the government locally has spoken about in terms of infrastructure spend, that is obviously going to filter through into the growth of Rubix, and obviously this is going to sustain their order book going forward. And I think we expect their financials to look good, especially on the fact that they'll also dabble in the renewable energy program space, which is obviously adding to some of their earnings there. So we will see the result of their 6 months ended for 31st of August. That is anticipated to be published in the next 2 weeks, around the 7th of November. So given all the diversity and obviously their operations, I think it will be a great set of results from them.
Very comprehensive market update there. Thank you very much, Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank.